right, peoples, I had one more for you that I had forgot to make. I had gathered all the data. So let me jump into this. I've been talking about these weeklies and some analysis, and so I thought I'd jump in and start covering these on the weekly distributions. So Roundhill, as many of you know, have two weekly funds, and their funds are based on the S&P 500. Oh, I had to sneeze. Sorry about that, guys. So the S&P 500, and that's the XDTE, and they also have a QDTE based on the NASDAQ 100. So let's jump in here and see what they say about them, and then I'll get, whoops, I don't have, this is what I wanted to show you guys and not the spreadsheet to start with. Okay, so looking at the Roundhill site, weekly distributions, S&P 500, so they seek to generate high income through a covered call strategy on the S&P 500. Now, they're not holding these overnight. They literally are 0 days to expiration. They write it and then they take it off, and they either made money or lost money, and they collect it during the week, and they figure out, and then off they go and they make their payment. So they typically, they declare once a week, and then the next day is the ex-dividend. So your opportunity is passed to get it for this week. But some of you that want to see what it was and say, okay, I want to buy it on ex-dividend date. Well, this is ex-dividend date, right? We're a half an hour into trading on 8/1. And then they pay on 8/2. So you can see the schedule here, right? And they've been doing this. They launched the fund on March 7th, and they declared their first dividend on the 25th. So let's go through the recent week, because the recent week has been really good. Let's take a look at that. So on 7/31, yesterday, they declared, with the stock price trading closing, I always put closing at 52.18. So they declared 35 cents. Well, kind of hard to know what that really relates to if you don't see some kind of yield. So basically, I turn that into an annualized yield. Since this is a 1 week payment, you simply multiply that payment times 52 and take the current price when it was declared, and you get a 34.99% yield. Call it 35. So what I'm doing here, and the way I want to present it, is to just take it since the beginning, right? And I'll start reporting on it weekly and showing you, so you can look back through here. You see 24, 19. So each of these represent what that payment is, okay, times 52 divided by the price. And that's giving you this annualized yield. So we go through here and they vary. Look at this one. This is horrible. 2 cents, right? That means they lost money on a lot of their dailies. So it wasn't so good, but it happens sometimes. So as I go through this, you get a feel for what's happening. So I'm going to take you through the summary, and then I'm going to pull up the sheet again for Roundhill as it relates to the next one. But let's just go through this sheet and we will give you the summary, peoples. So I'm trying to get back so I can have the next one ready for you when I finish on this one. So I'm on my other monitor. Just bear with me for a second. Income. Here we go. I'm doing XDT, and I'll pull the NASDAQ one up. All right, got it up, prepared to show you that. All right, So let's summarize this. So what else I did at a quick glance, you can see, did the weekly go up or go down? So I didn't want to do percentages. I just wanted to just simply say, how much did it go up? Well, this is 10 cents higher, right? Almost 11, 10.98. And to be honest, these could probably be reduced down. They don't need to be such big numbers, right? They're not as important, right? So now we've rounded these because here I leave it in because technically that's exactly what they're paying. So if you've got 1,200 shares or 400 shares, the math is going to vary if you use these decimal places. Not a lot, but over here it's a little bit less. So I have them color coded when they went down from the previous week. And obviously when you have your first week, that didn't go up or down because it had nothing for comparison. So let's also look, and I think this is important to tell you, how is it doing annually and year to date. So I took this price, even though it launched on 3/7, both of them did. I just took what was the price at the first payday because you could have just bought in right then. I don't know if it was lower or higher on March 7th. I don't have it in front of me. So you can figure that out yourself. So what's the dividend total? I added all these together and we get $4.12. How did the price change? Well, it was 52.89 at the start. And as of yesterday, it was 52.18 when they announced the distribution. So it declined 71 cents. So let's take that out of total return. So we made a positive $3.41. Well, then you want to divide that by the 52.89. And this, I rounded it to 4 months and said, okay, that's $6, or sorry, that's 6.44%, $3.41 on 52.89. And then what is that times 3? Give or take a couple of days. So it's an annualized total return of 19.31. Again, I like total return. A lot of people say, well, what was my yield? Clearly, the yield, if you take 412, that's going to give you your true yield on payouts. But in my opinion, you need to look at the price change, right? If it had gone up, we'd be adding. Okay, so let's go over to the next one and talk about it for a second. This will be brief. And we see that it does the same methodology. It just does it on the NASDAQ 100. So what are they doing? They're doing 0 days to expiration. They're writing options. Here's your closing price. What's the since inception? And we walk through that. Okay. So let's go over now and look at QDTE. So QDTE also had, look at this yield, the highest yield. And the yield is simply saying, okay, it's trading at 43.81. It's paying 56, almost 57 cents. So if I multiply this times 52 and divide by the price, what am I getting back in yield? Well, 67.49. And I did the same methodology. Did it increase or did it decrease, right? And you see most of the time it's, well, 2, 3, 6, 7, 8, 9, 10, 4, 6, 8. So 10 weeks we went up and 8 weeks we went down. But notice here, the only slightly, even though the payout is greater, these are almost identical, people. So the total return for just this period, right, is 6.47. Look here, 6.44. So pretty darn close. Look at the annualized total return, 1941, 1931. Now, looking at this is, wow, I got paid a lot more money. And I got paid more money on a smaller amount of money. So if you just look at the return, is the yield return, how much cash am I getting back? It's much greater. But look at the price difference. We lost 71 cents over there. But here we started at 46.36 and we're at 43.81. So we lost $2.55. I say I lost, but it is, you do have a NAV reduction. So my net was $3. So when I divide that by this, okay, let's make sure we're doing that. Yeah, $3 by 46.36, I get 6.47. And then annualized is just 3 times that because I'm making it 4 months, give or take a few days. I actually have a formula for being perfect to the day, but I don't think it's necessary here. All right, guys. So I wanted to get this out. This is an update. I like these funds in general. Obviously, you're spreading your risk out over the NASDAQ 100, or I think you're better at spreading it out over the S&P 500, but there are times that NASDAQ's more on fire, like first 3 months of the year, NASDAQ. But look at this. This is over a period of time, and your total return couldn't be much closer. 1931 for the S&P and 1941 for the NASDAQ 100. Okay, guys, that's what I got. So this is Bruce with Targeted Wealth Creation. And I'll say bye for now. I'm not a financial advisor. This is not financial advice. Hopefully this was helpful, and I'll start doing this weekly as well. Okay, guys. See ya. Have a great trading day. I got to myself get back to that. Okay, bye for now.